Is the stock market really out of the woods yet? After a turbulent week, Wall Street staged a dramatic comeback, leaving many investors wondering if the worst is truly behind us. But here's where it gets controversial. Some analysts believe this rally is just a fleeting moment of relief in a larger trend of uncertainty, while others see it as a genuine sign of renewed strength. Let's dive into what happened and what might be coming next. On Monday night, stock futures showed minimal movement, essentially holding steady after a day of significant gains. This followed a volatile period where major market averages had surrendered a substantial portion of their recent gains. Specifically, Dow Jones Industrial Average futures edged up slightly, gaining a mere 19 points. S&P 500 futures and Nasdaq 100 futures were practically unchanged, hovering just below the flat line. This suggests a cautious optimism among investors, perhaps waiting for more concrete signals before making significant moves. The previous day, however, painted a much brighter picture. The S&P 500 and the Dow Jones Industrial Average each surged by more than 1%, with the S&P 500 recording its best single-day performance since May 27th. This impressive surge allowed the broad market index to recover over half of the losses it had sustained during Friday's sharp downturn. The Dow also experienced its best day since September 11th, snapping a 5-day losing streak and recouping 2/3 of Friday's losses. And this is the part most people miss. The catalyst for this rebound appears to be a message posted on Truth Social by former President Donald Trump, which seemed to alleviate investor concerns about escalating trade tensions between the United States and China. Trump's Sunday post, which stated, "Don't worry about China, it will all be fine," acted as a soothing balm to jittery markets. The tech sector in particular benefited from this perceived easing of trade tensions. Shares of tech giants like Oracle, AMD, and Nvidia experienced broad gains, propelling the overall market upward. The tech-heavy Nasdaq Composite Index recorded a gain of more than 2%, demonstrating the sector's sensitivity to trade-related news. Ulrike Hoffmann-Burchard, global head of equities at UBS Global Wealth Management, highlighted the crucial role of trade policy in driving U.S. financial markets this year. She noted that the previous week had witnessed a sharp escalation in tensions between the US and China. With hardened positions on both sides, we expect increased equity market volatility into the end of the month, she stated. But here's the counterpoint. Hoffmann-Burchard also pointed out that the history of Trump-Xi negotiations suggests that periods of heightened tension are often followed by tactical agreements. She suggested that potential compromises involving rare earth minerals and shipping fees could ultimately pave the way for a deal. This introduces a level of uncertainty, reminding us that the situation is far from resolved. Looking ahead, investors are eager to see if this positive momentum can be sustained. All eyes will be on major banks such as JP Chase and Goldman Sachs, which are scheduled to release their third-quarter earnings reports on Tuesday. These reports will provide valuable insights into the health of the financial sector and the overall economy. Here's a question for you. Do you think this market rebound is a genuine recovery or just a temporary reprieve before more volatility? Could a single social media post really have this much influence on the market? And what role do you think earnings reports will play in shaping the market's direction in the coming days? Share your thoughts in the comments below.